Analysis, and joining us now is CEAT, the management of CEAT. The company reported a mixed set of earnings. The revenue, of course, is up 45%, coming in above street estimates, but margins have contracted for the company, and that's not surprising. The margins have contracted both if you compare it to a year ago and to the previous quarter, that's Q3. Joining us now is Kumar Subbiah, the Chief Financial Officer. Thank you very much, Mr. Subbiah, for joining us. Well, first, if you can tell us by giving us the volumes. I mean, revenues give us some idea, of course, but if you compare to third quarter, what were the fourth quarter volumes, and how are the first 50% of the current quarter looking in terms of volumes?
Good morning, Lata. Quarter four, I think we grew by about little over 2.5% over quarter three, and large part of our revenue growth in quarter four was on account of volumes. And the same is the case year on year. Our growth of about 45% in quarter four was the same quarter of last year, also largely came from volumes. As far as current quarter is concerned, it looks a little weak. Okay, April was a weak month, and outlook for the month of May, even early part of June, looks weak. Many of our dealers are not able to run the shops, and OEMs have been cutting down production as the sales in the month of April was lower. So, demand outlook for current quarter looks weak.
Okay, can you give us an indication of how poor and also the mix between the sales to OEMs and how much is the volume going in the replacement market, and are you expecting pretty much the entire quarter to be a washout?
No, we're not expecting entire quarter to be washed out, but it all depends on how COVID wave 2 is going to impact the economy. Okay, and many states are imposing lockdowns at this point in time, so therefore many of our dealers are not able to operate. Our CEAT shoppies are not able to operate. Okay, so April month volume was lower in double digits. So therefore, current month outlook looks weak. We hope in the month of June it will come back to normal. That's what we are hoping at this point in time. But it is still early to say whether June would be normal. So it's in some double digits. Early double digits is the kind of decline that we saw in April.
Okay. Kumar, how are the geographical spread looking like? Is rural doing better? You're opened that 100 tire stop, 100 retail sales called Tire Stop. How are they doing? Are you going to persist with that, setting up that program remains unchanged?
No, see, till end March or even till early first week of April, okay, and we were firing with all cylinders across the country. Okay, it's only from beginning of April onwards, we started seeing some decline and weakness. It's across the board. I would say it's not in one particular area or one particular categories of tires where we are seeing weakness. So it's across the board. The initiative of 100 tires shop was a very important initiative in terms of penetration of our tires into the market. But it's difficult to explain and give reasons in terms of what the impact on that. But in general, we are optimistic on that initiative.
Okay.
Once things come back to normal.
And in addition, you have announced a 1,200 crore fresh investments in capacity. So can you just give us the plan? I mean, how do you finance it? Over what period it rolls? How much does it increase your capacity?
Okay, if you recall, 3 years back, we had that 3,500 crores investment plan for CEAT and about 500 crores for specialty. And on that 3,500 crores, a large part of it is done in terms of upstream. We have spent a little over 2,700 crores till date. Okay, and one of them was truck and bus radial tires at our existing facility in Halol to produce additional about 80,000 tires a month at Halol. Now our capacity utilization is little over 80%. So, and normally to set up a factory, it takes anywhere between 18 and 24 months. So the new investment that board approved yesterday to the extent of 1,200 crores is to set up a facility at Chennai to produce about 90,000 tires a month. In 2 phases we intend to do. So maybe 2 years from now, we expect first phase of that to be commissioned, and a year later or a year and a half later, depending on the market conditions. As far as the funding goes, it will be a mix of internal accruals and debt. We're happy to tell you, last year, despite a difficult year, we managed to bring our debt down by a little over 500 crores. And this is despite incurring project capex of about 450, 460 crores and a routine of another 180 crores. So our leverage ratios are looking healthy. Our balance sheet has strengthened. Our debt equity is now around 0.41, 0.42, and debt EBITDA is less than 1.5. So we would be able to fund, as it is going to happen over two phases. Our underlying assumption that has gone into this is we would fund about 60% through debt and 40% through equity. And that was our assumption for the earlier one. But however, we managed to fund the previous one largely through internal accruals. So we don't expect that to have any strain on our balance sheet if we manage it well.
Okay. Mr. Subbiah, what about margins? Because that's where the pressure is coming in. Can you tell us a little more about how significant raw material inflation is? And if you can't pass this on, then, will there be more margin compression in the quarters ahead?
Yeah, true. Yeah, true. The gross margin drop in quarter four was entirely on account of raw material prices. Okay, and we expect raw material prices. The impact of raw material prices in quarter one is going to be even higher than quarter four. Okay, because the prices has been going up steadily month on month. So the fact that we had some inventory in the pipeline, we managed quarter four lower than the replacement market. I think theoretically, rationally, there is a need for price increase to the extent of at least 6 to 8% to mitigate the impact of increase in raw material prices. But however, competitive forces will determine, what happens to that. We did take a little bit of price increase here and there on some other categories, but not in all the categories. So it's a concern as far as increase in raw material prices are concerned. Okay, we hope we are able to mitigate it through price increase in the current quarter.
Okay. Kumar, it's always a pleasure having you with us. Thank you very much indeed for joining us. It's good to hear that people are looking beyond the immediate negativity and beyond the immediate lack of demand. Anyone speaking about expansions is welcome news. All the very best.
Thank you. Thanks a lot.
Okay, so that's a tire maker. There are, of course, commodity price issues and immediate demand issues, but no worries about the medium term. The markets actually are just within a range, dipping between red and green, not making a dash, but I guess that will happen closer to the end of trade because it's F&O expiry day. We are now going to have two very important guests. They are important every day these days. We've got two hospital chiefs. The reason we've invited them is the Reserve Bank yesterday announced a bunch of measures, incentives to banks to go out and lend to anyone who is a COVID warrior in any sector. Hospitals, diagnostics, importers of vaccines, makers of vaccines, importers of oxygen concentrators, just anybody. The banks will chase these companies to give them loans. So we have two stalwarts from that space, Sunita Reddy of Apollo Hospitals and Ashutosh Raghuvanshi of Fortis Healthcare joining in a minute after this break.